What's up? It's Rob. I'm going to go through my portfolio with you, giving you another update. We had a decent week in the market, nothing great. I got a little carried away, tried to do some scalping, and as usual, played some options and tried to scalp, make a few extra bucks, and it just didn't work out as I expected. Of course, the second I sold, price went my direction, but not the way it always works. Anyways, so this week we got $26,009.55. Let me show you my 1 week results. Dun, 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 dun. So we're up 175 for this week. We could have been up nicer. Like I said, I screwed up. Luna, simmer. I screwed up and I tried playing some options and it just didn't quite go my way. The one thing I need to learn is to quit doing that. The biggest change I made this week is I finally sold out a Ford, and I'll show you why. I did sell out a Ford, I think real close to the $12 mark. I think $10.92 or $11.92 or something right up here. It was getting very oversold for me, as you could see. It's really getting up there. We've had a good run. I think my cost average is around $10 a share. I just feel like now's a good time to dip out. I might sell a put this week. I just want to see prices pull back down a little bit, and maybe selling a put would make some sense. But it's just getting a little oversold to me, and I don't like Ford long term. It's stayed in a channel. Let's look at the 5-year mark. 2022, it's been stuck in this channel between $10 and $16. So getting up to 12, I know it's a little low, but you can see we're going to hit some resistance here. Looking at it kind of on the daily here, we're just about hitting that 200 moving average. So I feel like we could start hitting some resistance here, and I wanted to cash out while I was up and get out of that one. I could have sold a call on it. I just chose to get out of it for now. Maybe selling a put would be a better move. And so back on the stock side, one of the bigger changes was I did sell out all of my Ford shares, and I think share-wise, all I did was keep cost averaging into ENBD. I'm buying $25 a day of that. EPD, I'm buying $30 a day of that. SVOL just once a week, $20. What the heck? Yeah, I feel like it's a risky one. And Vicky, we've been cost averaging $50 a day into that one. These ones have very good dividend returns on them. Next week, I'll go into some of my dividends a little deeper and show you what they pay. For now, let me just give you an update. So those are the ones I'm cost averaging on each day in. So let me go over some of the options I got going here. I did buy a SPY debit spread last week because I'm out of all my SPY shares and everything. I want to capitalize if the market keeps going up, but I want to minimize my risk. So I do have 2 spreads. See, I'm down about $13 on it. I'm in them on average for $21 each. And so if at the end of next week it's over $4.73, then I will make $80 on each of those. So that's cool. Next thing I did was we still got our American Airlines call that we sold a week or 2 ago. And we're upside down on that one by $110. American Airlines really ran up on us after we sold that call at the wrong time, but story of my life. But even though I'm down $110 on that one. Watch out, here you go. On the shares, I'm up more than that. So it's cut into my profit, but I'm still in the profit for that. So that's my American Airlines call. I do have some put spreads. I'm just worried this market's going to pull back like a mother, you know? So I got some put spreads on SPY expiring January 19th. I'm in them very cheaply. I think I'm in them for about $5-10 a piece. Let's take a look. Yep, so my cost average is $20 a piece on those guys. They're worth about $5. So I'm upside down on them a little bit, but they're just my hedge. I got a couple more hedges. I did buy, there's another set of puts, so I didn't even realize it. I have 4 debit spreads. Let's see this guy. Okay, these ones are a little bit higher. So my cost average is $30 on each of these guys, and I'm down a total of $34 on these spreads. If SPY is under 456, then I'll make about $70 a spread on those guys. So they're just in case the market pulls back. I do have a Ford put, and that's because I had all those Ford shares. There's not much into it. It's only got about $17 of value right now, so I'll probably just hold it for a little while. It doesn't expire until March. Maybe try to get our money back out of that one. I did buy a SPY put, just a put option this week also. I bought it for $125. It's currently worth $129, so I'm up $4 on that one. But the puts were getting kind of cheap. That's the 405 put. It's crazy. It doesn't seem like it was that long ago that SPY was just at 405. So we could end up back there again. I think it's a good idea to have a certain percentage of your portfolio start hedging it as we get higher like this. Or start letting some stuff go. That's the way I am. I know some of you all diamond handle it, ride till you die, go all the way with it. But as we start hitting highs, I feel the need. I need to start hedging. It's in me. I feel like I got to do it. QYLD, nothing crazy there. It's just a crappy leap I got. Don't even need to discuss that one. I am still holding my Ford leap for next year. This one expires December 19th, 2025. So about a year away. My cost average on that was $475. And am I actually up on it finally? Yeah, total return. I'm up $8 on that puppy. I bought in it a little bit too early, so I'm happy I'm up on that one finally. So if Ford keeps running, I'll capitalize. I'll probably sell out of it as Ford gets to about $13 a share. I think is about the price I want to let this fellow go. That's all the options I have. My dividends, not a lot to talk about here. I got as for stocks, what I own in stock, I got 100 shares of American Airlines. My cost average is $12.16 a share, so very nice. I'm up $231 on that one. It might be time to start selling some calls next week or get out of it entirely. It does pay dividends, so I might want to just sell some calls. I do have some SQQ, about another 5 shares this week as it keeps getting up. I feel the need to keep loading up slowly. My cost average is $15.83 a share, so I'm down $50, so not that crazy under the water on SQQ right now. One little pullback and I'll be back in the monies. SQQ, in case you don't know, it's inverse ETF on the NASDAQ. So as the NASDAQ goes up in value, as prices rise in NASDAQ, it goes down. So if the NASDAQ pulls back, SQQ is going to go up. It does rebalance every once in a while, so it's nothing you want to hold super long term. I am holding 100 shares of Coke. I just got a dividend off of that one. My average cost is $60, although I did sell a put on it a while back, so I'm closer to $59.50, I think, for my average cost on that. So I'm still upside down by $132. It did break $60 a share this week, I think. Let's see. Yeah, we were right up there, right? Move over here, buddy. Right there, $60 it bounced right off of. So I made it to break even, and I considered selling a call, but I didn't. Oh well, I think we'll still run a little bit higher next week. Typically, if the market pulls back, if SPY goes down, Coke goes up. So I think we're ready for SPY to pull back. So I still think there's some room for Coke to run. I've owned it a couple times in the past. I always sell out of Coke right before it runs, so I don't want to make that mistake again. SVLL, I got 4.5 shares. Walgreens, 2 shares. Nothing big. Didn't even know if I wanted to keep this, but I'm up nicely on it. My cost average is $20.46 a share, as you can see, and Walgreens is at $25.24. So I didn't even want to be into this. I just kind of bought into it. Now I'm wishing I would have bought a lot more. EPD. Let's see what I got in here. So EPD's at $26.36 a share. My cost average is $26.43. So I'm just barely down. This is another one that pays nice dividends. Like I said, I need to make a new video where I talk about some of the dividends that these guys pay. I have a total of 26 shares, a little over 26 shares in this one. I'm cost averaging into this guy. ENB, let's see what I got here. So ENB is currently at $35.39. My cost average is $34.75. This is another one I'm cost averaging in on, and I'm up $21 on this one. This is another nicely paying dividend stock. I like these guys. Vicky, this is one I feel really comfortable on. This one has to do with real estate. So real estate's at a low right now. Interest rates are at a high. It's a crappy time in real estate. I think it's a good time to be buying in on these stocks. As you can see, I'm up $128 on this one. I have 58 shares with a cost average of $29.25, and it's currently at $31.45. Then I got some JEPI and JEPQ. I only got 2 shares of JEPQ, so let's look at JEPI. And JEPI, I'm up $38 on. My cost average is $53.77. It's currently at $55.03, and this is another great paying dividend stock. Really happy with these guys so far. And then SPYI. I believe this is a covered call ETF. I'll have to check, but I'm not real heavy in this one. I'm just playing around with it. I'm up on it. It's another good, really well-paying dividend stock. Anyways, that's pretty much the portfolio this week. Let's see if we got any dividends. Okay, so you can see I did get paid $46 for my 100 shares of Coke. That's nice. I got some Jeppy, $9.76. I do have these set to reinvest. Just keep buying more shares. Some JEPQ, I got my 84 cents. Nothing crazy. And, oh, that's S-Vol. I don't know a lot about that. I'm still experimenting with that one. So I got 56 cents on that one. I believe it pays monthly. So I do want to get heavier into dividend stocks this year. Although with right now with tech stocks being so oversold, it's not the best time to be going into Google, Amazon, Nvidia, all those kinds of stocks. But dividend stocks are pulling up out of the hole. So I feel like it's a great time to start loading up on your dividends. That's what I got this week. I'm happy to be over that $25,000 threshold. That's kind of what screwed me this week, was I wanted to go and try to make 5-6 trades in a day and not have it be a big deal. I haven't been able to do that. And I did that. It cost me a few bucks. You know, now that I'm over that $25,000 threshold and they have me labeled as a pattern day trader, I didn't know they actually labeled you as that once you're over that $25,000 threshold. As you can see, I didn't know how it worked once you broke $25,000. I haven't done that before. So now that I'm over $25,000 in Robinhood, they have us labeled as a pattern day trader. And it's just not a big deal, I guess, as long as you stay over that $25,000 mark. So that's cool. I thought this would just all go away and it wouldn't be there. They kept saying you're about to become a pattern day trader. It's just like, well, what the heck does that matter? I'm over 25,000 now. So anyways, all right. That's what we got this week. Like I said, I think what might happen, what some of my goals this next week are, I might sell a call on Coke if we can get back up over 60. I might sell a call on American Airlines, and maybe I want to sell some puts this week. So you just got to be careful. The market's about to pull back. I'm telling you, I feel it. And you kind of get this FOMO feeling when you see everybody else's accounts running. And I mean, I did okay for the week, up $175. I could have been up a lot more. I mean, I sold out all my QQQs a few weeks ago and all my SPY a few weeks ago. I could have been up a lot more, but I just feel like we're getting heavy up towards the top here. So, all right, I'd appreciate a like or a dislike. Let me know how cringy these videos are. Any advice in the comment section, I'd appreciate. And I'm just going to keep updating y'all on my portfolio. Eventually, I want this puppy to be to $1 million like the rest of us. So I'm going to each week talk about where I'm at, how I got there, and what the week looked like. All right. I'll talk to you later. Appreciate you watching.